Welcome back to the HM Accounting YouTube channel. If you're a business owner in South Africa, you know that change is constant. Tax laws shift, interest rates fluctuate, and compliance requirements tighten. The question is, are you prepared? Today, we're going to discuss 6 practical strategies to keep your business financially strong, adaptable, and ahead of the curve so that no matter what changes come your way, you're always ready. I'm Humaira Mullah, CEO and founder of HM Accounting, and I will be taking you through this today. So, the first thing you need to do is to stay informed and be proactive. One of the biggest mistakes I see is that the business owners only start thinking about tax and compliance when deadlines are looming. Now, I can tell you that for sure. I have so many clients approaching me in February, in March, because now they're getting letters from SARS to say that their tax returns are outstanding. And we don't want to leave things for the last minute because it puts everybody under so much of pressure and so much of stress and rushing and hurrying. And by then, your ability to make any strategic financial moves is extremely limited because the year is entirely over. The reality is that economic policies and tax regulations do not change overnight. There are always signs, updates, and industry discussions that indicate what's coming. One of those things that we could talk about right now is the budget speech, right? And what does this tell us? But if we look at things like the unemployment rate in the country, if we look at things like the inflation rate in the country, these are all indicators that tell you what is going on in the country. So don't ignore the SONA, don't ignore the budget speech. These are very, very, very important things that tell you what is going to be happening in the economy. If you haven't, please do watch my interview, which is the previous video with Radio Al Ansar, where I explain how and what to focus on as a business owner in the budget speech. Now, back to what I was saying about just being informed, staying informed. How can you do this? How can you keep ahead of the economic events and changes in the industry? Number one is follow financial news and industry updates, right? Regulations change ever so often. Now, make it a habit to stay informed. So, watch or read up on all the SaaS changes, right? Read up on those types of things. Watch YouTube videos. I mean, like this, you can be watching YouTube videos where we share the changes with you guys, which make it so much easier. News articles. I mean, we have access to unlimited internet resources where we can read and we can learn and we can stay abreast, right? Engage with professionals who go beyond just tax filing. So, your accountant should be a strategic partner and not just your compliance officer. Remember that. And then join business forums or communities where discussions on tax, finance, compliance take place, business, what is going on in the industry. Those are so important to keep you staying ahead, keep you staying educated. It's so important who you surround with yourself with because the types of discussions that are going to happen in those situations are extremely important for what you learn about business and about where the economy is headed, right? At Asian Accounting, we absolutely strive to empower our clients with financial knowledge so that they can make informed decisions year round. Now, I'm not saying partner with us, but I'm saying partner with an accounting firm who is not only going to ensure that you are compliant, but that is also going to keep you abreast of what is changing in the industry and how your business can adapt. The second thing is to strengthen your cash flow and your financial resilience. With interest rates rising, the cost of debt is increasing. So, if your business relies heavily on credit, now is the time to reassess your financial situation and decide what are the measures that you can take. Cash flow management is not just about having money in the bank, it's about having the right money at the right time. One is you want to reduce unnecessary debt and you want to renegotiate interest rates where possible. You can renegotiate interest rates with your suppliers. Remember, times are tough and suppliers also want business. So everybody's a little bit more willing to compromise than they were in the past. Unnecessary debt. Start paying down your debt. Do not accumulate debt. I That is something that I just do not believe in, right? I don't believe in paying interest and the bank getting my money and extra money on top of that. So try and avoid that as far as possible. One of the values that I have is that if I can't afford to pay for it with my money, with my cash money, I do not engage in it. Right? If I can't afford something, I stay away from it until I can. And I think that's a very important concept because it saved me from a lot of situations where I could have incurred debt. And these are things that you should also consider. Number two is build an emergency reserve for unexpected costs. Now, whether it's a tax adjustment, compliance fees, or a supplier price hike, I stress repeatedly that it's so important to have an emergency reserve, an emergency business fund. So, savings every month that you just put away in case of all of these unexpected costs coming up, whether it's a SARS payment, whether it is repairs and maintenance that came in unexpectedly. So, your PC breaking down and you need a new PC and you didn't have the funds, but you've got it saved, so you can buy that, right? Or you needed to buy extra stock this month because you realize this is a busy season and you didn't have the cash on hand, but you have that emergency fund. You can use the money from there. It's just something that you take as a precautionary measure, and that you know that you are safe and that you are secure. It's good to have money in your bank account. It's good to have savings. You just are emulate a more confident person as well, and you're more sure of yourself because you're not in that state of never having money, right? The third thing is be disciplined about your receivables. Look, this is a huge problem, receiving money from customers. My husband's got this great policy where it's cash, and then the product is supplied, right? And so he saves himself a lot of trouble with debtors. Other people have had to learn the hard way. But remember, if you are not strict about receiving collections from debtors, it affects your cash flow because you still got to make payments to suppliers. You still got to make your staff payments. You've still got to make all of these payments. And you are losing money by not receiving it from your customers. So late payments from your clients can create unnecessary cash flow strain, right? It puts you in a tough financial situation. It gives you more stress. You could end up incurring more costs in legal fees, in all those types of things. So have very strict measures in place with your payment terms. For example, you only release work once the full payment is received. You only start the work when you receive a deposit. That's an example in a service-based industry. In a product-based business, it could be things like cash on delivery or cash before you give them the product or whatever the case is. You could also, like I said, I do understand that economies are tough. Not everybody can just pay the cash, especially if it's larger sums, but have proper contracts in place, have them signed, charge interest on late payments. So make sure that you are engaging with your accountant and you are discussing these types of things and how to avoid these situations that are just going to cause you more headaches. Now, I am Muslim, and from an Islamic perspective, Islam encourages ethical financial management, and it absolutely discourages excessive reliance on debt, which is called riba. So, where possible, explore sustainable financing models such as profit sharing. In Islam, it's called mudaraba instead of high interest loans, right? Profit sharing is a much better way to go than high interest loans. And I think that anybody can apply that. You do not have to be Muslim to apply that. Remember, a strong cash flow position gives your business agility. So you're not just reacting to economic shifts, but you're actively managing them. Number three is structure your business for tax efficiency. How your business is structured determines how much tax you pay and whether you're taking advantage of available tax incentives. Many small business owners or startups unknowingly overpay simply because their tax structure isn't optimized. You will also see in one of my earlier videos, I did a video with Hilal TV, and we spoke about the different structures that you could go into. And I thought this was an important topic because it affects it really guides the trajectory of your business, right? and it guides things when it comes to taxes. So remember, with a sole proprietor, the more you earn, the more money you pay in taxes, simply put. Whereas with a company, the corporate tax rate is fixed at 28% at 27% at the moment, down from 28%. Look, our budget speech is still coming up, so I do not know what to expect. But right now it's 27%. Um, and it's fixed. So regardless of your income increases or your income's low, there's a fixed rate. But also remember that there are a lot of incentives and a lot of deductions that you can utilize in your business. You have turnover tax, you have SBC rates, and these can significantly reduce tax burdens for qualifying businesses. So definitely speak to your accountant about this and see how you as a startup or as a small business could implement and save on taxes. I've got lots of companies who are startups, who are small business owners, and we really take advantage of the tax incentives that there are for business owners. The key takeaway is that tax planning isn't just about meeting deadlines. It's about ensuring your business is structured in a way that minimizes tax liability and maximizes financial efficiency. Number four is adjust your pricing for inflation. I had to learn that the hard way. And so I paused there, right? Because, so in my Quantec EMBA, we have just been studying the previous unit was all about economics and just inflation as well, and how with inflation the cost of goods in the market increases. So if you are still, for example, charging 100 rand for a product this year and you're charging 100 rand for a product the next year, that 100 rand that you get in that next year that you take to go and buy goods and services at a store is more expensive than it was in the previous year. You were still really receiving the same money, but inflation increases every year, which meaning you are getting less value for that money. So my great tip here, and something that I learned and that I've now implemented, is that adjust your pricing with inflation so that you are not getting less out of your money than you used to, right? You are still getting the same value out of that money. Your cost of goods, services, and operations are going to rise over time. Now, the challenge is that many business owners hesitate to adjust their pricing out of fear of losing customers. But a smart approach to pricing is to review your cost structures regularly and make those adjustments incrementally. Your customers are not going to have a problem if you increase their fees by 4% or 4.5% or 5% or 2%, but they are going to have a problem if you just increase it by 10% or 20% or 50%. So really incrementally increase it year on year, so that your customers do not also end up leaving, right? Focus on the value-added services that justify those price increase rather than just raising prices arbitrarily. So when you are raising these prices, also focus on not just what you can get, but on what more can you give. And it can be something small that you could give, but just for your customers to get that value for that money, which is then justified to them as well. And there's many ways that you can do this. Like I said, it doesn't have to be big things. It can be really small things like starting a YouTube channel and creating videos and sharing it with your clients so that they have access to this information. It could be sending out newsletters to your clients and just keeping them informed of things. It could be a little gift that you give to them that's not going to be a drastic cost to you. So really focus on that value. It could even be a handwritten note saying thank you. That's what I'm trying to say, is that first think about what you can give before what is it that you can get. And I'm telling you that your customers are going to be willing to pay you if they receive value for their money. Identify areas where operational efficiency can offset the cost increases. So automation and digitalization can reduce overheads, right? I so am for this. We have so many tools, guys, so many tools to make things easier. And I know there's talk about AI replacing jobs, but look, we got to learn how to use it and make our lives easier, faster, quicker, really just save on that time. So utilize these types of tools. There are many out there. Remember, strategic pricing is about sustainability. If your costs are increasing but your prices remain unchanged, your profit margins are shrinking. And it's about balancing market competitiveness with financial viability. Number five is compliance and diversification, which, in other words, I would say is preparing for the future. Regulations are definitely becoming stricter, and businesses that aren't compliant with SARS, with CIPC, and with the labor laws risk serious penalties or even operational shutdowns. Beyond compliance, businesses that rely on a single revenue stream are also at risk. Diversification is key to long term sustainability. How do you future proof your business? Stay fully compliant. VAT, PAYE, and provisional tax submissions should always be up to date. Diversify your revenue streams. Businesses dependent on one sector are more vulnerable to policy shifts, right? And look, I'll give you another example. In my case, I have different sources of income, right? So we have the accounting and tax and bookkeeping, so the general services for compliance. We have consultations, we have digital products. There's so many things that we can do. So think about what is it that you can do in your business that can diversify those revenue streams. You do not have to go in and buy a second business when you can barely run your first one because you're so overwhelmed over time. Just try and diversify some of those services. Try to have it where you do not have to be present all the time, but that customers can still get the product, or they can still have access to your service, or they can still learn more about you from these types of things. So do think about diversify. You also do not want to have your compliance left for late, right? Because costs add up, and then you start paying the interest and penalties on that. So really, when tax season opens, start getting your things in order, start submitting it. Do not leave things for the last minute. I've seen this mistake repeatedly with businesses, and it's not a good thing. Sometimes they leave it for 1 year, 2 years, 3 years, and then there's so many penalties that have accumulated, and the business owners do not know what to do. So stay on top of things. You also want to explore funding opportunities. Government tenders and business grants often come with these tax incentives. So look into that. There's many government tenders, there's many business grants available. And you want to really look into that, apply for these, and see what it is that you can do, right? But you've got to have your tax documents up to date to apply for these types of things. A business that is both compliant and diversified has far greater stability no matter what economic conditions arise. And number six is plan for long term financial security. This is really not stressed enough. It's really not stressed enough for business owners, right? When you are a salaried employee, you don't have to think about this because generally you take out retirement annuities or you've got a medical aid. But business owners themselves do not focus on long term wealth. Instead, they're just trying to get their businesses profitable and just trying to give themselves a salary or a decent salary, but we've got to start thinking about retirement fundings. Now, while many business owners focus on the immediate financial concerns, few take the time to plan for long term wealth and retirement. Yet, how you save, reinvest, and structure your finances today will shape your financial security for the years ahead. So, please don't neglect retirement funding. Take out a retirement fund and ensure that you are protected for the future and that your business serves you in the long run, because we cannot be running our businesses forever. We do need to have legacy plans in place for how we are going to live. We are getting older every day, right? We're not getting younger. We've got to start thinking about these things and start planning for retirement. I also think just being in South Africa, being in the industry that we've been in, it's obviously not something, financial literacy has not been taught enough, strived enough, and how important retirement funding is. So I definitely do want to stress that point that, business owners, please go ahead, plan for your retirement. Start early. Do not wait until you are old. Start early. I want to share another Islamic perspective, which is called tawakkul, or trust in Allah, right? So trust in God. It's very important, but Islam also emphasizes responsible financial planning. So it's about trusting God. Trusting God will be there for you, but also planning, right? Also tying your camel. Also ensure that you as a business owner are being responsible in your life. Future financial security is not about fear, it's about being intentional with your money management. A sustainable business isn't just one that thrives today, it's one that's built for long term success. So, the most successful business owners do not just react to economic changes, they anticipate and they prepare for them. Whether it's optimizing your tax structure, managing your cash flow, or staying compliant, taking a proactive approach will always put you in a stronger financial position. If this video was helpful, do not forget to like, subscribe, and drop a comment below. What is your biggest financial challenge right now in your business? I would love to hear it, and let's see what we come up with in our future videos. Until next time, take care, enjoy the budget speech. Bye.